Good morning, traders, and a happy Wednesday out there to you all. Hope that y'all had a good evening there. And it should be a nice day in front of us here. We had some decent activity there taking place in the overnight session, so we'll have that to take a look at here shortly. And just before we go diving into the charts, as far as our calendar goes for today, just to note, fairly light on the U.S. side of things. We do have a Richmond Manufacturing Index at 10 o'clock Eastern. So right at that first 30-minute inflection point, that little sweet spot during the pit session. And then outside of that, pretty clear cut there. You have member Williams speaking at 1:45, and then the Beige Book. Right, Beige Book will be due out at 2 o'clock Eastern. So just a handful of items there on the board, nothing too pertinent. So with that, we can for one grab our daily chart of the S&Ps, blow it up there just a notch, and just for starters initially, right, regarding this 53, 33, 50 here on the dailies, that was just our previous high test basis to futures, and we had been getting quite a bit of trading around this point as of late, meaning leaving a couple tails. We've closed around that point, and then we opened near that zone there yesterday. So we did proceed to close, beneath it slightly, and then obviously in the overnight session we could see that we were able to trade on the other side of the previous day's low. So our overnight low is 52.8775 basis these S&Ps here. So already traded on the other side of our previous day's low. Also in the zone here, it's as if this were a 5-minute S&P data. The moving average will continue to rise as we do some overlapping structure here on the daily displays. So that comes in at 52.74 and change. So we'll keep that in mind in terms of the daily EMA. As far as the oscillators in this zone, we have the 2-period rate of change just flipping down or poised to flip down. It did some work there yesterday. We closed up off the low, so now we're getting a little bit of a better test back towards that point. So as far as the daily composition in and of itself, that's essentially what we're working with there. And the S&P is essentially daily EMA would be our primary point of interest down below. And should we showcase any holding and push back up at all, that 33.50 should still serve as nice overhead. So we have some nice points of interest even just on the daily charts there for these E-minis. Obviously the intraday chart we start to get a tad more detail in the approach. So we know yesterday we traded below, didn't necessarily close down there, but we tested below the 53.05.75 just from having 2 data points there in the past, and we had accelerated through that point when we did test it the first time around. So yesterday was our second time coming back down through the area. We kind of tested beneath it and then proceeded to come back up. So thus, in the overnight session, we did a better job of coming down and doing a better test or look below the previous day's tail. So into this area, even though we've traded through it twice now, I still feel the 53.05 will be an important area here on the 120-minute display. And then we can see any further down from here, we have these nice little windows right from our previous tail, coupled with 2 data points between that 73 and the 64. But we got to take it one step at a time, right? Those points are quite a bit lower there in terms of the S&Ps. But in case we have any deeper response, it's nice to have our points marked off in advance. So those are the areas of interest down below. And then up above we'll be looking at the 53.05.75 again. Coming down from that time frame, we see something like the hourly charts, not really showcasing any signs of major divergence as of yet. So that's another thing that we'll keep an eye out for, are these lighter time frames, the hourlies and the 30-minute charts. Should we start to form any type of nice patterns there on the oscillator. But for now, in the morning session, I do appreciate this 120-minute chart as being a nice tone there to work with going into our U.S. morning. So that's where we are there in the S&Ps. We have our DAX future next in the queue, which we have just up above here. On the hourly charts, here with the case of the DAX, not quite the same as the S&Ps. We had our 2 days of low to high in the DAX, so we already had our, if you would, the sell short day or the first day of high to low in the form of an outside down bar. Interestingly, here with the DAX, we came down and gave it a nice test. The spike tail low that we had left there from last week's trading, right, the bottom of this coming in at 18.577. So the DAX, the thing is, on the other side of that particular zone, you start to enter into what would be this single time framing mode that we had initially coming up in the case of the DAX. So testing on the other side of it. So far we haven't gotten too much continuation, but just to note over there on that left hand side, we did come up through that area fairly quickly. So that would be similar to pushing into low developed zone there for the DAX. And then how to get more detail on this is if we grab an hourly or a 120 minute, open it up, and we'll start to see where that low developed area comes into sight. All right, so here's the 120-minute test. That's that same 18,577. We know we were looking above into low developed zones up above, and then we start to open this up just a notch further, and we start to see as far as where we came from initially here in the DAX. So that's what's making this 18,577 an important area of interest, because we can see we had quite the zone there to deal with. So we can even come in here and put that as a bit of a caution zone there for that of the DAX future. So we'll keep that in mind there. Structural work that would still loom below, but for starters here, primary point of interest will be that 18,577. See how they trade at and around that point there for our DAX future. But some good tone there. Nice rhythm that it has there. I think those hourlies and 120-minute time frames should be perfectly okay there. And then we have our currency group here, the EC. Arguably one of the more tame ones out of the group. We know yesterday we had this was done early on in the day, but we had fallen just a wee bit short on getting on the other side of the 1.09 figure there with the euro currency. So quite a tail that we had left. We reintegrated ourselves back inside that previous day's range, right, which we had additional tails. At the time, that was that 87.20 area that we were dealing with. Right, previous spike high tails that was on the 120-minute chart. So we snuck ourselves back beneath that point, and what we're starting to do, well, here we'll continue with this daily chart just for a couple more moments here, is that we do have, we had our nice run up. We spent quite a lot of time digesting between 90.15 and 82.85, referring simply to this one range expansion bar that we had. We spent quite a lot of time playing inside of that, or digesting that initial advancement that we had in the euro currency. So a little bit of the price bar overlap type of sequence unfolding there. So nice and tightly wound. And then coming over here to the 120-minute chart, and this is where we had our instances of the lower highs, the lower cycle lows, and then we had our instance of starting to change the tone a notch. We had our two higher highs coming into sight. So if we were to come in and take out 1.09, which for now is quite a ways up there, that would be quite a constructive item there for the euro currency. But kind of more so in the camp of seeing if we trade a bit between that 87.20, 84.95, continue to fill out a bit more range, and then in case we have any crazy response, 81.50 would be a pretty big caution zone there for the euro currency. But seeing as they already had a good nice response down in the overnight, we left a tail. We're kind of back overlapping with where we closed there yesterday, so allows them some room to roam here on that 120-minute display for that of that euro currency. All right, and then the more active one of the bunch here would be that of the gold, right, the GC, which we'll start off as well with the daily charts, right? We had our good, damage that was done, 2 days of nice high to low, and we had an open door, especially yesterday when we were coming up above the 2360 to do a better job on filling in some of the damage that was done. We already had 2 days of low to high, so coming into the session today, we have the ROC, flipping down for the first flip back in the other direction. So testing back on the other side as well of this daily 5 SMA. But what we really want to note here is that when we were trading yesterday and we were coming up and started to look above the 2360, we really had a better open door to do some better job on pushing up further, repairing some of the initial damage that was done. But as opposed to that, we started to form some overlapping structure around that point, just getting acceptance, not really accelerating through it. So thus in the overnight session, we proceeded to check back down. We've done some testing around slightly on the other side of the previous day's low. So it still leaves us with the 23.26 as being, a pretty big caution zone, right? That's the bottom of this previous week's consolidation phase. And still feel the 23.60 will be of good value up above there in the gold, right? We tested above it initially, left a nice tail. We accelerated somewhat, and then came back, and then we started to do that overlapping structure around that point. So gold, big picture as well, if we're looking at something like a 120 minute, you jump out a notch or two higher, and it'll be much more similar to what we're looking at here with the daily chart of the gold. Right, our 3 days low to high, just kind of showcasing what would be a normal flag on the 240-minute chart. So still a little bit weary there with the gold, right? The fact that it didn't do as much there yesterday makes it a little bit of a greater cause for concern there. And yeah, I'll take a look there and see, we can easily get that gold rolled there. It looked like it was okay on the trade station at first, but it very well could be starting to shift over there slightly. And so it looks like volume is slightly shifting over there to August. So what we can do here is just adjust our reference points, because our shape and everything is going to be quite much the same. So the equivalent point here that we'd be looking at in the case of our AUG gold would be 2348.7, and then the equivalent of what would have been that 2360 is going to be 2381. So that's basis the August and then the regular June series there. So a little bit of comparison, and since it was mentioned there, I'll also drop in the link for that of the gold, so you can see the volume slightly higher there in that August series. So we'll have the Q. We'll use that as our front month there for today's purposes. So appreciate the mention there, but luckily the structural components are quite much the same there on the daily and the intraday charts, even on the August series there. So we'll carry those ones forward there. And then we have this crude, right? The crude is a very key one here, because we're starting to make our way outside of our previous range that we had built out for ourselves there. We had been spending quite a lot of time, right? And it's always tricky, right? Because the nature of these ranges is that when we come up, towards the upper end or lower end, we kind of bring it back inside the middle or the core of the range. So it's always curious when they do eventually start to come out of it, because you want to see it done with good volume and good conviction. And they definitely came out, impressively there yesterday, coming away and looking above the 80.11 and even closing on the high tick for that at the crude. So we proceeded to get some follow through overnight already, so we already made the higher high. Also to note are the high readings on that 2-period rate of change down below, just indicating, a sharp change in tone over the past 2 trading days. So up in this area, we did look above it, just to be aware of, or keeping an eye out for, any signs of consolidation at all. Really, that 80.11 will be a substantial point of interest there for us. So I'm looking in here, I see on the 60-minute charts you have a sell divergence in the crude, meaning higher high in the price. The hourly oscillator is correcting. Thing is, like we said, you're breaking out from a previous range. You really have to go out like a 240-minute chart to really get a feel for this one here, just because we've spent so much time into this area. But with that said, here in the crude, above 80.11 for one, looking on that left-hand side, we had very heavy selling pressure coming down there to begin with. So first try up in this area, we have quite a lot of overhead, so that's where, keeping in mind just the nature of these hourly charts. The moving average will continue to rise up, but currently it's nifty because the hourly moving average pretty much ties in with that high test on the dailies, that 80.11 spike high tail. So we'll keep that in mind there for the crude. Obviously the stronger one of the bunch. It's just a matter that it's already come off of 2 days of strong low to high. So 2-period rate of change flipping down, and we'll keep an eye, see if those hourly charts give us any good play to work with there, right, in terms of their technical condition. And then the bonds finally breaking down from their balance, right? Yesterday we saw the range expansion bar come to the downside, which was quite curious because many of these other groups stayed a tad more on the contained side. But bonds did do nice range expansion down out of balance, and they closed on their low tick nonetheless as well. So we made nice range expansion down in the bond. So we've already gotten quite a lot of follow through from them. So to know, we'll look at this in just a moment, that we'll have a little bit of a gap zone. But along the way here on this structure with the bonds, in particular beneath 115.21, that was a spike tail that we had there from the past. So we kind of traded beneath that point. So between this 15.21 and 14.25, that's quite a big zone there for those bonds. So it gives them plenty of room to work with inside there. And then just to note, if we come down to like a nice 30-minute chart here and take into account the 8 a.m. reading from where we closed yesterday to where we're opening today, we're going to have a small gap area, right, in honor of Damon's charts there, like on the market profile view. That would show up as a gap from the, overnight session, from day session to day session. So just bear in mind, since the bonds pushed down already overnight, that you'd have a small gap on the 8 a.m. reading type of view there. So that's that, and then back to what we're working with here on the core display, right? 115.21 would be a little bit of kind of like a pivot zone for the bonds, meaning coming back up above that point, right? Would be impressive. We could do some repair job on yesterday's progress, but staying beneath that point gives us once again room to roam between that 21 and the 14.25 in the case of those bonds. Right? So nice window for them. And then as mentioned yesterday, right, we were talking about watching in with these boons here as well today. I had a little note to check those out here in the morning session. Okay, breakdown from balance yesterday. Right, 3-bar balance mode, range expansion down out of it. And how about that? On these boons here, you have them making full test down or new lows. So that could very well be nice to see if we're looking for similar activity there in the bonds in those 30s. So good tone though. These boons look pretty rough around the edges there beneath this 129.53. Alright, so with that, we're going to shrink back these charts. Get everything back and dialed in here for us. We should have a nice day lining up in front of us here. We'll take this 20-minute chart, blow it up nice and large here, and then we'll swap out this daily here and bring over one other group, and then we're going to be rocking and rolling here for this session in front of us. I think we might bring over here this gold on that 120-minute time frame there as it goes to continue to sort itself out. Then we got the DAX here on the top left. Poor DAX is coming in here and breaching that previous cycle low. And yeah, regarding the crude here. So here's the crude. Right. Superstar momentum coming in here over the past 3 trading days, one time framing. Right. Higher highs, higher lows along the way. Nice new high readings on the 2-period rate of change, so we can make this super bolded, but this would be the main level, right? Holding above that, it's kind of using that as a pivot, if you would, in the crude, right? Holding above that, we can continue to just, pause and rotate, work off some of those hourly charts. Coming back beneath that would be much more interesting there in the crude. So here's the 80.11 on the dailies, right? Look above it. If we continue to maintain, we can make better progress, come outside the coil. So that's why today becomes of utmost importance, right? Because we've spent, I don't know, since basically our trading in May up until, basically the month of May, we've been trading in this coil. So when we initially come out of it, right, we really want to make sure that market, can be trusted, right? So the only thing of note, like we were saying, is that this hourly chart, the 60-minute data, is showing a sell divergence, which the moving average comes in at that 80.11 point. So wouldn't be overwhelmed or shocked if we did slowly start to gyrate back to that point there, or have some movement towards the moving average there. So we'll keep that in mind there with the crude and see what we got lining up here for this nice morning in session in front of us.